Hey Bowtie Nation, Joseph Hogue here, and I've just found a dividend stock that has grown its payout by more than 15% a year and has increased it by 36 consecutive quarters. That's 36 dividend payment increases on a stock that has produced a 20% annual return for 5 years. Now, I'm going to show you that dividend stock, but because this channel isn't just about force-feeding you stocks, I also want to give you a step-by-step on how I found it and how to build your own portfolio of top dividend stocks. For all you out there in the Bowtie Nation, thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Now Nation, you know we love dividend stocks here on the channel, but there are a lot of traps investing in those high yield stocks. A lot of bad stocks in dividend stock wrappers. Stocks like San Juan Royalty Trust that, while it might seem like a great deal on a 9% dividend yield, has actually lost money over the last 5 years because the share price has fallen so much. In this video, I'll give you 7 criteria to find the best dividend stocks to buy. Walk you through step by step on how to create that dividend stock list. Then I'm going to show you how to build a portfolio of dividend stocks, how to put all this together and reveal that top dividend stock that checks all the boxes. We're getting started, but first I want to get your input on this. Which of the 7 criteria do you think is most important when picking that dividend stock? And which of the 7 that we'll talk about do you rely on to find that top dividend stock for your portfolio? So scroll down and let me know in the comments below. Now, these 7 dividend stock criteria are all equally important, but let's start with the fun stuff first, the dividend and growth info. And here I like to see a dividend yield of at least 4% annually, which I know might not seem like a high yield stock, but it's still more than 3 times the 1.3% you get on that broader stock market. Now you can find some good dividend growth stories here with yields of 3% as well, but I wouldn't go much further down than that. With a yield of 3 or 4% or more, I know management is prioritizing that shareholder cash return. Now finding the dividend yield is easy enough. It's usually on a stock summary page, or you can take the annual dividend payment divided by the stock price. I also want to see dividend growth of at least 5% a year over the last 3 or 5 years. Now you can find how much a company is growing its dividend by looking on Yahoo Finance or any investing app. You go to the historical data tab and change the time period to 5 years, then show only dividends. Now this is going to show you each dividend payment and how much the company has increased that over the period. And like any of these factors, I like to look for a certain level. For example, maybe at least 5% annual dividend growth, but you can play around with these. It's all to that point of narrowing your list of dividend stocks down to the 5 or 10 best to buy. You can also use this for our third criteria here, checking the dividend history for missed payments or consecutive increases. Check to see how often the company increases its dividend payout or if it's cut the dividend in the past. Now 2020 played hell with dividends, and a lot of companies just played it safe, either not growing their dividends or even missing a payment, so you might want to relax this one a little bit to expand your list of stocks. Last criteria for dividend health here, I like to look for the payout ratio of the stock. Now that's the percentage of the earnings the company is paying out to cover that dividend, and it's a great indicator of dividend sustainability and the potential for growth. You take the amount the company is paying out as a dividend. For example, Apple pays out 88 cents a share annually, and then divide that by the per share earnings, which for Apple it was $5.11 a share, or a payout ratio of 17%. Now obviously Apple isn't much of a dividend stock, and the low payout ratio reflects the company's focus on reinvestment and share repurchases rather than that payout. If you saw that payout ratio get into the 70 or 80% range though, you'd have to question if the company could continue to pay that much in earnings and still grow sales. Conversely though, for dividend stocks with lower payout ratios, it could be a sign that they can increase that payout and not sacrifice growth. Now that gives you 4 dividend criteria, and I like to add 2 more fundamental checks and 1 for returns when looking at dividend stocks. The first fundamental one here is I want to see strong revenue growth over the last 3 or 5 years. A company is going to have a tough time growing its dividend if it's not making more sales, and this is a great indicator of competitive advantage as well. To find this one, just go to the income statement within the company's financials and compare this year's revenues with what it booked in the past. And what's important here is when you're comparing stocks is that you compare companies in the same industry. So for example, retailers against retailers instead of trying to compare something like Bed Bath & Beyond against shares of Tesla. You have to compare growth rates and other factors against similar companies to really show you which is outperforming their competitors. Also on the income statement, I'm looking for companies improving their operating profitability. Now, all you out there in the nation know this is probably my single favorite stock ratio, the operating margin. It's the percentage of sales left over after paying suppliers and operating expenses, so core profitability measure for the business. A company that can grow its profitability as well as sales is on the way to exploding earnings and dividend potential. Here you go back to the income statement and find that line marked operating income. Then you divide that by the total revenue. So Apple booked almost $100 billion in operating income over the last year on $347 billion in sales for a 28.8% margin. Now that's just slightly higher than the 27% margin posted in 2017, so a little bit more profitable. Now an increase in that profitability margin probably isn't quite as important here, especially if the company is really growing sales fast or the dividend. But all of these are going to work together to help you find that very best dividend stock to buy. Now finally here, before I reveal the top dividend stock from these criteria, I also want to look at the total return on a stock, the return from both the share price and the dividends. To find this, again, we go back to that historical data tab and we'll change the time period to 5 years, but keep it on showing historical price. We'll also switch to monthly prices to make the table a little bit more manageable. Now here you want to look at this adjusted close column. That's the stock price adjusted for any dividends or splits, so an all-inclusive measure of return. And if we scroll down here, we see that 5 years ago, Apple was trading for just $26.50 a share, or a 5-fold increase on your investment. Now we can get the annualized return here by taking this at the exponent of 0.2, and we see that Apple has produced a 41% annual return, which is absolutely amazing. Nation, even though we're looking at dividends and dividend yields here, do not neglect that total return, especially to make sure that the company isn't destroying value with a lower share price. In fact, I like to see a total annual return of at least 10% or about twice the dividend yield. Now, as much as I love dividend investing, you've got to have growth in your portfolio as well. So I'm revealing the top 5 growth stocks in my own portfolio, 5 disruptive companies for double-digit returns. I'll leave a link in the video description below. It's a totally free report, so click through and check that out. I'll reveal that top dividend stock idea next, but I also want to highlight some criteria for building a complete dividend stock portfolio. They say you shouldn't put all your eggs in one basket, which I really don't know why you would carry 2 baskets of eggs, but you definitely don't want all your money in just one dividend stock. So you want to focus on 2 ideas here that are going to create that top-rate dividend portfolio, a mix of different stocks for that diversification and safety, and a dividend ladder approach that gives you constant cash flow. Now for that diversification side, look for dividend stocks from different sectors and industries, as well as different structures. Nation, I know those high dividend yields on REITs and BDCs are attractive, but do not invest all your money in just a few of these special types of companies. It's just going to set your portfolio up for a crash if something happens to that industry or a change in the tax law. Now, if you're not sure what industry or business type the company is in, you can go to the profile section on Yahoo Finance, and it's going to tell you the sector and industry. For example, popular dividend stocks and MLPs are going to say oil and gas midstream. Now your business development corporations or BDCs are going to say asset management, and the third type of popular dividend stock here, these REITs, are another one to watch. And again, it's not that any of these particular types of companies are bad, but they all react similarly to things like interest rates and the economy. So having all your stocks in these high yield groups can set you up for a crash. Now you also want a mix of total return and high yield stocks. Yes, this is a dividend video, and we all love those 6% plus dividend yields, but price return can be just as important over the long run. Just don't forget to look at that graph of the stock price to make sure that management is growing the company and not just paying out everything as dividends. For that ladder strategy, this is where you want at least 5 or 10 dividend stocks in your portfolio paying out in different months of the year. And to find when a company pays its dividend, you can go to Yahoo Finance and click again on that historical data tab. We'll change the time period to 5 years and then to show only dividends and click apply. This is going to show you when each dividend was paid, and while it's not the same day each year, it's usually within the same week. So using this information, you can pick your dividend stocks strategically to make sure you get a dividend check every single month. Now getting those constant dividends isn't an absolute must if you don't need them right away, but it's a great way to build your portfolio for the future. Before we get to that top dividend stock, there were a lot of strong candidates from the list, and obviously I wouldn't say put all your money in just that one stock. Building out a portfolio in different sectors and laddering your dividend payments means investing in a handful of these like AbbVie, ticker ABBV, Citizens Financial Group, ticker CFG, Arbor Realty, ABR, and even Alliance Bernstein, ticker AB, all producing great yields and fundamentals that meet our dividend list criteria. But the top dividend stock that met all of these criteria is one that you might not have heard about: Cogent Communication Holdings, ticker CCOI, with its 4.5% dividend yield. Cogent carries a fifth the world's internet traffic over its network, primarily corporate traffic and co-location through 54 data centers. The company operates more than 60,000 miles of fiber optic cable, providing services to 210 major markets. Now, demand for office internet traffic is obviously down over the last year, but it is recovering, and overall internet traffic growth is supporting the business. Now, Cogent's advantage comes from its low-cost position. It built its network through leases more than a decade ago, when rates were much cheaper. Its leased network has an average remaining life of more than 20 years still, and over 200 network suppliers, so Cogent is basically just spending on maintenance and small equipment upgrades now and generating $160 million in operating cash flow. Checking back on our list of dividend criteria, Cogent has grown the dividend by 15% annually over the last 5 years and has increased it in every quarter since 2015. Revenue has grown at a 7% annual pace in the 5 years through 2020, and the operating margin of 19% is an improvement of 8% over the period. That is a huge increase in profitability, so even if revenue growth is a little slower here, it's still able to increase profits at a faster pace, and shares have produced a 19.6% annual return over the last 5 years. Click on the video to the right to see the top 7 dividend stocks for both cash flow and growth. 7 stocks that increase the dividend and the share price. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.